The Federal Reserve is about to unleash an inflationary supernova, according to some. You came here for the truth, so let me unveil that for you. What's going on in 2024 that we've got to understand? Because if interest rates are cut, if inflation resurges, our lives will be turned upside down. You thought 2020 into 2022 that inflation was bad. My goodness, 2023 went further. And of course, what we can expect for 2024 could actually be much worse. We are actually letting our guard down. When you see what's happening here in the United States, there's an election year. You know that the government itself is going to try to do everything it can, keep those gas prices low, keep people in their jobs. They're going to cut student debt as much as they can. They will increase taxes where they can, knowing that they're trying to buy time. They want to make sure that this can happen for at least another year. They got to do what they can. Right now, though, we can see that rate cuts are on the table, but that could present itself with a big issue. March is a big thing, June-July timeframe is a big thing, and I'll get into that today. First things first, you could see this year will be dominated by rate cuts. What's set to happen with borrowing costs of 2024? Market expects that in the first quarter of 2024, the Federal Reserve is going to cut. Other central banks are going to cut, and they're not the only ones to do so. Of course, we can look right here. It just talks about, yeah, Brazil did it, Czech Republic did it, a few others did it as well. Looking at it, we would see that there's been a big change already. That's kind of turning in the other direction. Once the Federal Reserve does their first cut, then the whole world's going to look at that and say, okay, here we go. Because the Federal Reserve is the US dollar, and we need to understand that the whole world relies on that US dollar. It's the monopoly, it's the reserve currency. And the value of that US dollar is going to affect the value of all other currencies. These are traded against each other, and that's really important. The expectation by many is that the Federal Reserve is going to start cutting interest rates, and that is going to further weaken the dollar. So it's going to bring the dollar down in relation to other currencies. They will get stronger, and then trade balances will be, coming into the picture. I personally like when the US dollar is really strong, because when you live outside of the United States, it's nice to get an extra bonus on your paycheck. You know what I'm saying, okay? Looking at this, the Fed could slash rates below 3% to maintain notoriously difficult soft landing. And that's the thing. So we'll see what happens. Are they going to actually cut? Are they going to see inflation resurge? Some are saying inflation will in fact resurge. I'll cover that in a second. But this article is talking about what I covered in previous videos, Fed President Lori Logan. One of the aspects that needs to be understood is that the Federal Reserve is trying to prevent what happened in 2018. To summarize, basically they started tightening. They were going through this policy. Janet Yellen was there, and she said it's going to be like paint drying. It's going to be boring, and it's going to be something that you can expect. All right? Step 1, step 2, step 3. And this didn't make the market happy. Even though everything was laid out there, it was understood. Reserves dropped to a level that they deemed was too low. The market said, no, we don't like it. And suddenly it was a big freak out. They started reversing, and they were doing not QE. Okay, they called it not QE unofficially. And that was a big problem. And the whole market started going into this topsy-turvy thing, and it was crazy. Okay, that was 2018. They're trying to prevent the same thing happening today. And long story short, June, July timeframe is looking like at this time anyway, the most likely stage at when quantitative tightening stops. If quantitative tightening stops, that is, again, part of this big, imagine like steering a ship. The pivot, it's like steering a huge ship. Not turning yourself, not you as an individual turning, not a football player doing a pivot. We're talking about a big ship. So you're going to start turning that wheel, and it's going to take a long time for things to move. And that's what's going on here. That's what's going on in the economy. That's what's going on with the Federal Reserve. It's a big thing. So the first thing to do is project that at some point you're going to do it. That's the first thing. And then you start doing quantitative tightening. Then you start doing interest rate cuts and so on. You could thank the Fed, not repaired supply chains, for falling inflation, according to a think tank. Now, I wanted to mention something here. Okay. Looking at that, you'll see what they said. Inflation hasn't been influenced by supply side trends, according to a think tank. Now, let me mention something here. So you can go off and look at these other people out there that will they're purely academic, or they just read the news. They have no idea what's going on. Okay. They're YouTubers. That's their profession. But for myself, I know what's going on, and I know that all of my costs increased. Every single one of my costs increased. Okay. So when I look at it, the shipping cost increase, yes, that did happen. Input costs, all of the input costs, the employees, they needed more money. The warehousing costs went up as well. Shipping, I said that. You look at the raw material costs, that went up. Fees, okay, on the platforms that I use, those went up one by one by one. So what do you think that does? Of course, that has an impact. And the times involved, the prices that I had to pay was pretty incredible. Anyway, everything's up. So yeah, that did have an impact from 2020 and on. But let's not ignore the Federal Reserve devaluing the currency. But it's not just the Fed, as they say here in the second point. Instead, inflation was mainly caused by fiscal policy and reversed through interest rate hikes. Now, I'm not so sure I would agree with the second part of that, but the point is, yeah, if you're going to hand money to everybody, if you're going to do cash for clunkers, well over a decade ago now, if you're going to do all these, TARP bailouts, that creates inflation. But it doesn't just happen the next day. But let's take this extreme example, because I know there are some out there that will say, when you print money, you don't create inflation. Okay. Well, let's just say you printed a whole bunch of cash. Let's call it $1 trillion. Why not a quadrillion dollars? And just handed it out to everybody. The Federal Reserve prints that cash, the digital cash, and gives it in everybody's bank account. What would happen? What would happen to the price of everything? Well, now you could go out and you could buy anything you wanted. You could buy 100 of anything you wanted. But that would, of course, create an issue where suddenly they are going to increase the price of everything, because now it's so easy to get cash. You see, everything's so affordable. Services would increase like crazy too. Oh, I know you could afford it. I'm going to charge you 100 times more. You see, that's what happens. So the same thing happens with the fiscal, with the quantitative easing, all the same thing. They're devaluing the currency in one direction or another. Don't get hung up on where's it coming from. They're both doing it. Inflation could see a resurgence, and investors expecting a perfect outcome for the economy this year may be disappointed. That's according to BlackRock, the best friend of the government. And it is true that we could see a resurgence. The only question is why? And is it because they start cutting interest rates, quantitative tightening stops, they start printing money? Like, is that why? Or is it because of supply side, situation? Is it because of oil? Who knows? That's really the question. The fact that it can resurge, of course it can. This is just to show that the Federal Reserve, they're all basically on the same page. When you look at their dot plot, or what they call SEP, that just shows that they're ready to see inflation come down at this point, and so they'll start to cut rates in the near future. That's all. All right. Wall Street is trying to nail down the timing of the Fed's QT taper. What you need to know is that June or July timeframe becomes the most likely time. Okay. Why? Why June, July? Well, because of the things that have been happening. I covered this in maybe a video like two videos back. But what's going on here is that the Federal Reserve has these different programs in place, and the expectation is between March and between that June-July timeframe that we're going to have a lot of changes, and as a result, quantitative tightening comes up, and maybe, just maybe, they're going to stop it. If they don't stop it, I really think they're going to signal when the end of that will come. One of those programs that is set to expire in March is the BTFP, or the Bank Term Funding Program. And what's the point of this? Well, it was put in there as an emergency measure to bail out the banks or give a lifeline to the banks when SVB, Silicon Valley Bank, and the others started to fail. So they put that in. They said, hey, it's 1 year. But what's happening now is these companies are simply going in there, they're borrowing, and they're borrowing money from the Fed, right? And then they're borrowing from the Bank Term Funding Program, getting it at a cheap rate, and then parking it at the Fed and getting this difference, getting the split or the spread. So they're just using it as a way to make some money. They don't need a lifeline. So they could end this program right now if they wanted to, the Fed, because they're not using it because of a lifeline. Okay? Interesting to see where things have gone. Anyway, the point here is that what we will see is a big change in 2024 come March and then that summer timeframe. So on this channel, I will give you all the details. Anybody in my Finance Friday class is going to get everything they need to know. And of course, on the Sunday lives, that's where we talk about the real solution, and that is being able to have your own source of income, to get that income coming from multiple sources, multiple currencies, multiple platforms, multiple places, so that you've got income coming from, more than you could ever imagine, and you're scaling it on the back of other businesses. That's the whole point. Okay. I hope you appreciate this. If you want to find out more, there will be a link in the description, the Money GPS Live. Okay. I hope you'll check it out, read through the page. If you have already, I've made a little bit of changes to it. So click that link so you can see it for yourself. If you don't mind, hit that thumbs up button on the way out, because that's how you support this channel. I don't ask for other things, just a thumbs up. That's how you do it. And of course, I'll see you tomorrow. Take care.